Okay. Right. So, hi everyone. So we are in chapter 3. Right. So we have discussed first first 3 chapters, introduction to accounting, accounting equation. Then we did double entry system, ledger accounts, and now we are in chapter 4, which is prime entry books. Right. So in this chapter, the prime entry books, there are few areas: the source documents, prime entry books, bank reconciliation, control accounts, and correction of errors. Okay. So yesterday we were able to cover the control accounts part. Today I thought of discussing the bank reconciliation and the error corrections. Okay, so let's start with bank reconciliation statement. Bank reconciliation statement. So what is this bank reconciliation? That means normally a business will maintain a current account with a bank. Say the business is maintaining a bank account, current account with Hattha National Bank. Okay. So for the business, this current account is an asset account. Right? Therefore, if the business deposit money in the bank, it is recorded in the bank account. Bank account is an asset account. It will be debit. Deposits are debit. Right? It's an asset. And any payments we have to credit. Right? Receipt, debit, payment, credit. Similar to the cash account. And for the bank point of view, if the business deposit money in the bank, it is a liability. They must repay that. So if we deposit money in the bank, it is credited to the bank. Then the balance will increase. And if we withdraw money through a check, it is recorded as a debit entry in the bank statement. Okay. So all what we debit here, all the debits, all these debits should be credited to the bank. All the debits should be credited to the bank. All the credits, all the credit should be debited. I'll repeat again. What is a bank reconciliation? Now, any business, they have a current account with the bank, right? From the business point of view, this current account balance is an asset. Therefore, business will maintain an asset account, cash or bank account. Bank point of view, this is a liability because they have to repay. It's a liability. And the bank will prepare a bank statement. So whatever the transactions we record in the bank account should be equal to the bank statement. Then what we deposit, what we debit in the cash account, what we debit in the cash account must be credited to the bank statement. And what we credit in the bank's cash account should be debited in the bank statement. Okay, if there is a difference, now here the bank statement balance is 95,000. Bank statement balance is 95,000. Cash account balance or the bank account balance is 100,000. So there is a difference. So if there is a difference, we need to identify the reason for the difference. We need to identify the reasons for the difference. Okay, so let me explain this example. So here we have a bank statement and the bank account. So let's call this as bank account. For January, this is the bank statement for January 2020. Right. So how do we check? So we'll start with debit balance in the bank account. Let's start with debit balance in the bank account. Now opening balance 50,000. Here also opening balance 50,000. What you have to do is you have to tick these two balances 50-50. So that is there. So it doesn't make a difference. This 50,000 will not make a difference because it is there in both bank account and the bank statement. Cash deposit 20,000. Cash deposit 2nd January. So this is a deposit which is realized on the same day. So it is also won't make a difference. Then there is a check deposit 01. Check deposit 01. Deposited on 3rd January. Normally, remember, if we deposit a check, there is a clearance process. There is a clearance process. So it will take about 2 to 3 days to realize the money in our account. So that is why 3rd January check realized in the bank on 6th January. Next, check deposit 69. Is it there in the bank statement? No. So this is only recorded in the bank account. This is only recorded in the bank account. So this is called deposited but not realized in the bank. So we can write under reasons for the difference. Number 1, this is number 1. We call it unrealized checks. Unrealized checks. How much? 25,000. Unrealized checks 25,000. That is number 1. Okay. Now let's see the credit side of the bank account with the debit side of the bank statement. Check number 11, payment check 11. So it is 10,000. 10,000 payment check. Right. It was given on 8 January and it was taken money on 12th January. Then there is another check, check number 12. This is not in the bank statement. So what is this? We have given a check, but it was not presented to the bank. We have given a check, but it was not presented to the bank. This is called unpresented check. So this is, you can write reasons for the difference number 2. Unpresented checks, 15,000. Okay. Next, now the bank account is done. Then we go to the bank statement. There are some other transactions which is not in the bank account. One is bank charges. Bank charges is 5,000. Then standing orders. 35,000. Direct deposits. 45,000. So these are the differences. There are 5 differences. Now the next step. Now step 1 is what we did. So what is the step 1? Compare the cash account and the bank statement. Cash account means the bank account is. Compare this bank account with the bank statement. Identify the reasons for the difference. So we found the reasons. There are 1, 2, 3, 4, 5 reasons. Okay. Then the second step. Second step is we have to prepare the adjusted or revised cash account. Revised bank account and bank reconciliation statement. If you remember, I was explaining yesterday in control accounts, how to prepare the adjusted control account and the reconciliation statement. So similar to that, here also we have revised for adjusted bank account and the reconciliation statement. Okay, how do we continue this? We start the revised bank account, balance brought forward. The closing balance of the bank account is the opening balance of revised bank account. Then there are some transactions. There are some transactions not recorded in the bank account. What are they? What are those transactions? These 3. The bank charges, standing orders, direct deposit. These are not in the bank account. So we must record these three transactions in the revised bank account. Any receipts will be debit and payments will be credit. There is a question, so why do we put 100,000 in balance brought forward? Now 100,000 balance brought forward is the closing balance of the bank account is the opening balance of the revised. This is actually the continuation of bank account. We are continuing this account. This bank account we are continuing. That is why we take as the opening balance. Then these three transactions record and there are two transactions which make further difference, that is unpresented checks and unrealized checks. Right here, plus okay. So let's record these transactions, bank charges. It's a payment minus standing order. It is also minus or credit 35,000. Then there is a deposit. It's a receipt. And you'll find the closing balance. How much is the balance brought forward? Okay, so total debit is more. Difference 105. Difference is 105,000. So we take that balance in the bank reconciliation statement. It's a debit balance, so it's a positive balance. Okay, then there are two more transactions, unpresented checks and unrealized checks. So we have plus and minus. So to remember this easily, what you can do is plus means you take present unpresented PP, right? So unpresented checks will be plus and remaining only unrealized checks. Unpresented is plus. Remember the P, 15,000. Unrealized checks, it's a minus figure, 25,000. Right, what is the balance? Yes, correct. It's 95,000. So this is the basic of bank reconciliation. We prepare the bank rec with revised cash book. And remember, there will be only 3 transactions. Mainly, there are only 3 transactions which comes to the bank rec. One is unpresented checks. Number 2, unrealized checks. Number 3, bank errors. If there's any bank error, we have to record it in the bank reconciliation statement. Is that clear? The basic introduction part of bank. Now let's move to a question. Okay, let's move to an example. Okay, right. This is a example question. The bank statement of XYZ shows a favorable balance of 243 as at 31st January, while the cash control account shows a debit balance of 175,000 debit. Bank statement 243, cash balance is 175. So there is a difference. And the reasons for the difference are as follows. There are 4 reasons. Required adjusted cash control account bank rate. Okay, take 5 minutes and try to do this question. Okay, so let's start the question. The bank statement of XYZ shows a favorable balance. Favorable balance means, remember, it's a debit balance, favorable. 243,000. Opening balance, balance brought forward. Sorry, it's a bank statement balance. Okay, it's a bank statement. That is, your final answer should be 243,000. 243,000 is your final answer. Cash control account shows a debit, that is also favorable balance, 175. So let's write 175. Opening balance. The reasons for the differences are as follows. The bank has deducted 5,000 as bank charges, and this was not recorded in the cash control account. Bank has deducted 5,000 as bank charges. This was not recorded. Then what do you do? In the cash control account, we have to credit bank charges 5,000. It is an expense. It's a payment. Payment will be credited in the control account. Next, number 2. An interest of 98,000 was directly received to the bank as interest income from a fixed deposit. However, this was not recorded in the cash book. So we have to record this in the cash book. Interest income. It's an income. 98,000. 98,000. Number 3. The check of 125 was issued by XYZ Limited on 29 January, but it has not presented to payment to the bank. So this is called unpresented checks. We add unpresented check. We need to add unpresented check of 125. There's a question. Can't we put it under direct deposits? This is not a direct deposit. This is recorded in the which one? Interest income. Yeah, you can put it as direct deposit. That is okay. Interest income. That is okay. Yes. A check of 150 was deposited to the bank, but not realized. Unrealized checks we have to realized deduct. That's all. So let's calculate. The closing balances. 273 balance carried down. 268 is the adjusted cash book balance, or revised cash book balance. Then we take that balance as the opening balance of the reconciliation. Then bank reconciliation statement, the closing balance or the bank statement balance 243. So this is the balance. So that's about basic bank statement and bank reconciliation statement. I hope it's clear. Now, any doubts? Because next I'm going to explain the error corrections. Correction of errors, including suspense account. I'm just briefing you all about bank rec and all the other chapters. Then only we can easily do the past papers. Yes, you can ask any doubt. What is the reason for creating a bank reconciliation? The reason is, now we have to compare the bank statement with the cash account, with our records, bank records with business records, right? So most of the times there will be a difference, right? In the, now if you see here, the cash book balance is 268. Bank statement balance is 243. So to show the reason for the difference, why there is a difference between these two, that is called reconciliation. That is why we prepare the reconciliation, to show the difference. Okay. Any other doubts? Now let's move to correction of errors. This is also very, very important chapter. Error corrections. Right. Okay. Accounting errors. Later I will do more complex questions, including everything. Okay, for now, we will understand the basic picture. Accounting errors. Right. There are three, we can divide all the accounting errors into three different categories. Okay. Based on the nature of the error, based on the time of occurrence, based on the impact on the trial balance. So if you take impact on the trial balance, there are errors does not affect the trial balance. There are some errors which does not affect the trial balance. Examples like missing transactions in full. If you miss the entire transaction, it does not affect debit and credit of the trial balance. Errors of duplication, compensating errors, errors of principles. So these type of errors does not affect the trial balance. And there are some transactions which will affect debit and credit of trial balance, right? Recording only one entry. If you record only one entry, if you, let's say you have recorded only debit, so there is a difference between debit and credit. So likewise, errors which does not affect and errors which affect. Then according to the nature, we can divide to several types. Errors of omission, that means not recording the transaction. Purchase invoice 200 is omitted from the books, completely not recorded. Errors of omission, missed. Number 2, errors of commission, recording lesser or higher value. 5,000 recorded as 500. Errors of commission. Number 3, errors of principal. This is also very common in our questions. Errors of principal. Does not agree with accounting principle. That means expense is recorded as asset. Right? Building is recorded as building maintenance. Or building maintenance recorded as building. Number 4, error of duplication. That means recording twice, duplicate value. Recording 2 times. Same transaction recorded 2 times. Then compensating. Compensating means one error set off by another error. That means sales invoice 800. Debited and purchases invoice 800 credited. So that means sales invoice 800 debited to sales account, purchases invoice 800 credited to purchases account. So likewise, one error compensate with another error. Then trial balance will be equal, but there are errors. Then other errors are called clerical errors, recording in another same nature account. Amal recorded in Bimal. Okay, so there are different types of errors. Okay, right. Now let's do the question. So I'll take few questions in order to understand the double entries, the error correction. Okay. Let's do an example. Okay. Let's do this example. Right. So this is an example question. The trial balance as at 31st March 2019 of Janasatha Traders was not agreed, and the difference of 43,000 was credited to suspense account. So if there is a difference in the trial balance, we transfer that difference into suspense account. unknown account. It was credited, so we have to credit 43,000 to the suspense account. Okay, can you all draw a general journal and a suspense account? Then I will explain one by one. Okay. Right. So let's start. Number one. So first one we already recorded. Suspense account. $43,000. Right. Number one. Cash purchase of 68,900. We are purchasing 68,900 for resale. So this is purchases. Was recorded in purchases account as 86,900. This was correctly recorded in the cash book. So there are few steps. Let me give the steps. Step one, right? Step one, record the wrong entry. Now we are doing workings. Okay, for all these we will do workings. Step one, let's record the wrong entry. What they have done. Wrong entry. Step two, remove the wrong entry. And step three, write the correct entry. These, based on the error, we can follow these steps. If there is a wrong entry, you have to remove it. And if there is a separate correct entry, you have to correct it. Now this error one, let's record what they have done. Let's record what they have done. Okay. So I need two ledger accounts, cash account,
and purchase account.
We need a cash account and
Purchase account.
a purchases account. We need a cash account and purchase account. So two accounts. Right. Cash account and purchases account. Okay. Now what is the error? Cash purchases 68,900 for resale was recorded in purchases account. Purchases account, they have recorded 86,900. Cash is correctly recorded 68,900. Cash is correct. So we don't do anything for the cash. This is correct. But purchases account, they have 86,900. So it is more. How do you correct this? From this 86,900, there is an extra additional balance. How much is additional balance? $18,000. So that 18,000 we have to deduct. So that is credit the purchases account. You have to credit purchases account. And if you credit here, then the balances will be corrected, and the difference we have to take it under suspense account purchases. So double entry is suspense account debit, purchases account credit. This is the double entry. So go back to general journal. So the error corrections are done in general journal. We record suspense account debit 18,000, purchases account credit 18,000. Here, suspense debit, purchases credit. And within bracket, you have to write a narration. Correction of purchases 68,900 recorded as 86,900 in purchase account. Now, why there is a question? Why do we take 18,000 debit to suspense account? Because this is one account, single account error, right? Here 68,900, here 86,900. So this will create a difference in the trial balance. So that difference was transferred to the suspense account. To clear the suspense account only, we transfer. Now, once you credit 18,000 to the purchasers account, there is no error in the ledger, right? So if you credit an account, you have to debit that amount in a different account. Every debit should have a credit. Same way, every credit should have a debit. So that is why when you credit 18,000 to purchasers account, that has to be debited to the suspense account. Two. Number 2. Maintenance expense on machinery 33,600 was debited to machinery account. So can someone tell me what is this error? The type of error? What is the type of error? Errors of yes, it's errors of principal. Asset. The expense is recorded as an asset. Okay, here we need, I'll draw 3 accounts. Cash account is correct, but I'll show what they have done. Maintenance expense on machinery 33,600 was debited to machinery account. So they tell only about machinery account 33,600. So cash is correctly recorded. That is okay. Cash account is credited. Cash is correct. Nothing wrong. But this is not machinery. This is machinery maintenance. This is not machinery. This is machinery maintenance. Okay. So we have to remove this from the machinery account and take it under machinery maintenance account. So 33,600 credit machinery account. Okay. So there is no entry goes to the suspense account. Why do we open a cash account? Cash account is to show the double entry that they have made. That's why I opened the cash account. They have done what they have done is machinery debited, cash credited. So nothing to do with cash. Cash is already, it's correct, but this is wrong. So from the machinery, to remove the machinery, we credit. And to show the correct entry, we debit the machinery maintenance. Then the journal maintenance account debit, machinery account credit. So when you are writing the double entry, the general journal, always write the debit entry first, and after that you write the credit entry. There is a question. So why do we record some entries in suspense account? Suspense account comes if there is a difference in debit and credit. If there is a difference in debit and credit, only suspense account comes. Otherwise, if there is no difference in the debit and credit side of the transactions or trial balance, we don't need a suspense account. See, first one, there is a difference. Cash credited 68,900, purchases debited 86,900. So there is a difference. That's why the difference goes to suspense account. But if you take the second transaction, cash credit 33,600, machinery debit 33,600. There is no difference. So it won't go to suspense account. I hope it's clear. Right, let's move to third one. Number 3. Additional capital 165 introduced by the owner was erroneously credited to trade creditors account, while other entry has been correctly recorded in the cash book. Cash book is correct. Since the cash book is correct, I'm not drawing the cash book. Let's draw only the creditors account and capital account. Let's draw only the creditors account and capital account. All right. Additional capital 165 introduced by the owner was erroneously credited to trade creditors account. So here they have credited 165. It's not creditors, it is additional capital. So remove the wrong entry. Now steps, follow the steps. Record. Now we did the wrong entry. Remove the wrong entry. How do you remove? Debit 165 and write the correct entry. Correct entry is capital credit 160. So this is the correction entry. Correction entry is creditors account debit, capital account credit. Creditors account debit, capital account credit. Okay, can you all do the rest? I'll give 5 minutes. 4, 5, 6, 7. There are 4 transactions. Can you all do them? Okay. So next. Number 4, rent income received 21,000 has been completely omitted from the books of accounts. Rent income completely omitted. Then how do you record it? Okay. I'll give another 2 minutes. There are few students still writing. Okay. I'll give 2 more minutes.
Rent income credit. Cash control account debit.
Okay. This is 43,000. Number 4. Number 4 is rent income received. Double entry for rent income received is cash account debit, rent income account credit. So I didn't write the working. So these are workings. Okay. So it's not compulsory to write the workings. Most important thing is the general journal and suspension. Number 5. Number 5. Rent expense 98,000 was debited twice in rent expense account, and this was correctly recorded in the cash account. So this is an error. Rent expense. In rent expense account, they have recorded 2 times, twice. Okay. So let's see how to correct this? Number 5. Okay, so we need a cash account and a rent expense account. 98,000 cash account, they have correctly recorded 98,000. But in rent expense account recorded twice, 98,000, 98,000, 2 times. Recorded twice. So how do you correct this? We have to remove one entry from here. So 98,000 credit. And so if you remove one, then it's correct. Then the other entry goes to the suspense account. 98,000. Rent expense. So double entry here in the general journal. Suspense account, debit 98,000. Rent expense account, credit 98,000. Suspense account debit, rent expense account debit. Next, number 6. Payment of 109,000 to trade creditor had been correctly recorded in the cash book. Cash book is correct. But no entry is made in the trade creditors account. Number 6. So it's like number 6. Cash correctly recorded 109,000. Cash is correct. But no entry is made in the creditors account. So we have to make the entry creditors account debit. Then the difference goes to suspense account. 109. And suspense account credit. Difference. Creditors account debit. Suspense account credit. Correction of omitted payment to creditors. Omitted list. In the last one, number 7. A cash sale of a cash sale of 73,900 has been recorded as 37,900 in sales account, and this was correctly recorded in the cash book. Number 7. Okay, let's do the working. Number 7. Number 7. A cash sale 73,900 has been recorded as 37,900 in sales account. Sales account. Okay, can you tell me the answer? right? So double entry is you need to find out the difference. Difference is 36,000. $73,900 minus 37,900. So 36,000 is the difference, right? Cash sales 73,900. In sales account 37,900. So difference 36,000 we have to add to the sales account. So 36,000 credit to the sales account, and we have to debit that to the suspense account. 36,000. Double entry, suspense account debit, sales account debit. Is it clear? Did you all understand how to prepare the error correction, how to prepare the general journal? All what I have done is the basic. Now, we take the fourth chapter. These are the areas. Okay. Source documents. We did the cash receipt payment journals, bank reconciliation, return inward, outward, sales, purchases, general journal, control account, subsidiary ledgers, trial balance, financial statements. Also, I did error correction. This is overall because in the final exam paper, they don't give particular subtopic. You will get a complete question that includes part of accounting equation, a part of bank reconciliation, a part of error correction. So that is why you need to have an overall picture first. Then we move to the past papers. All right. Okay. You all can complete the rest of the answer. going to do another past paper. Right. Let's do this is 2014. We want you all to understand control accounts, error corrections, and also uh, preparation of adjusted profits. So let's do a question where you have everything. Okay. This is 2004. Sorry, my mic was mute because my other laptop got off something, it got stuck. Okay. I will explain from the beginning. Sorry. Yeah. My mic got stuck. My laptop. Sorry. Okay. I hope now you all can hear. All right. So let me start from the beginning. This 2014 paper. The following information relates to Amin PLC, which commenced operation on 1st of March 2014. Right. So this is the balance. This is the debtors account. Debtors account. Details. Debtors details. Sales, discounts, cash, and the balance. And they also have given creditor account details. Additional information. The total of balance of ledger, debtors ledger, and the creditors ledger as at 31st March 2014 did not agree with the balances of respective control accounts on this day. The following were related to the subsequent investigation. That means, as I said earlier, there are two ledgers, right? One is the general ledger. In general ledger, we prepare control accounts. And in the sub ledger, we prepare individual accounts. Right? So control account balance and the individual account balances are not tallying. There is a difference. So the reasons are given here. Required is, and also number 2, they have given the draft income statement of the company reported a loss of 2 million before rectifying the above errors. So before correcting the errors, profit, the loss is 2 million. Okay. Required journal entries to correct the errors. So error correction and calculating the revised profit. So before we move on to the adjustment part, let's prepare the debtors control account and the creditors control account before the errors, recording these transactions. Revised profit is not the revised cash, revised profit, income statement, revised income statement. That's different. Okay, so let's write the balances. Opening balance, there is no opening balance. Okay, so we can write balance brought forward 0, no opening balance. Then sales 3,000. There is a small difference. Right. So let's do with the errors. Okay. Wait. Okay. So let's do the control account, debtors control account and creditors control account with the errors, what they have done. There is a question. Can we put it as trade receivables instead of debtors control account? Yes. Trade receivables control account. Trade payable control account. That is okay. All right. Now let's see what they have done. Starting from first bullet point. Starting from first bullet point. The total of the sales journal has been posted to the debtors control account and the sales account as 300,000. 300,000. Actually, it's 3 million. Actually, it is 3 million. But posted as 300,000. Then what do you do? Sales. Here. Sales. Write the wrong entry. What they have made. They have recorded as 300. So that is wrong. Okay. So this is the first transactions that they have made. So I'm just writing that 3,000. So how do you correct this? How do we correct this? Recorded as 300. How do you correct this? We need to increase this balance, isn't it? We need to debit another 2,700. Okay, so let's do the correction part after this, after doing what they have done. Okay, so 300 they have debited. The second one, it says the discount allowed to debtors has been debited to the debtors control account. However, it has been correctly recorded in the discount allowed account. So normally double entry for discount allowed is discount allowed account debit, debtors account credit. Right? But here, what they have done is discount allowed account is correctly recorded and also discount debtors control account debited. How much is discount allowed? 250. So that was debited here. 250. Discount allowed. Discount allowed debited. 250. Okay. I'm doing the errors. Then next, third one. There are different methods. Okay. I'm just explaining one method. Right. First, I'm going to do the error, then we know what are the errors that they have made and rectifying the errors. Okay, because there were some questions. Right. Second error also we did. Third one is the total of the purchases journal has been posted to the creditors control account and the purchases account as 4.2 million. Actually, it's 2.4 million. Here it's 2.4 million, but it is posted as 4.2 million, posted more. So in the creditors control account, here purchases recorded as 4.2 million. Okay, so this is also an error. This is also an error. Next, goods returned 20,000 to Priyanka has not been recorded in her account in the creditors ledger. This has been debited to creditors control account and creditors credited to sales account in the general ledger. Goods returned. So it's a purchaser's return. It's recorded in her account in creditors ledger. Not been recorded in. This has been debited to creditors control account and credited to sales account in general ledger. So it has been recorded in sales. Here they have taken return outward. So let's see here, Priyanka. She is a creditor. She's a creditor, right? So it is not being recorded. Here there is no return. No return. Then debited in the creditors control account. So we will debit return outwards. Return outwards. That is correct. But it is not in the debtors ledger. That will make a difference. And credited to sales account. So that we will correct it. Okay. Right. Now let's everything else in the debtors ledger, everything else in the debtors ledger and creditors ledger, we can take it here. Okay. So sales, we took the sales 300. Discount allowed, we have to take whatever in the discount allowed also we have taken debit side. That is also given as an error. Cash received, no difference. So we can take whatever in the debtors ledger, 1,250. Right. Then take the balance. Cash received means it is cash account debit, debtors account credit. Cash account debit, debtors account credit. Cash account only debit, not the debtors account. Okay. Now the balance comes from credit side. This is what in your general ledger before correcting the error. Before correcting the error, this is what the balance. $700. And creditors control account purchases wrong balance, discount received. Stay. Discount received 200. Cash 1,180. The balance. Right. Now, the thing is, let me clarify again. Okay. Let me clarify again. This is debtors ledger. This is creditors ledger. Right. In debtors ledger, the closing balance is 1,500. It's a debit balance. But in the control account, the balance is credit 700. The reason is these two. Sales recorded as 300, discount allowed is debited 250. That is why here there is a difference. This is the balance of debtors ledger. And creditors ledger, balance is 1,020 here. But control account balance is 2,800. Reason is this purchases and return outwards. These two are the differences. Okay. Now let's do the correction. This is I did this part just for you to understand. Right? The answer will be this general journal. Now only I'm going to write the answer. Okay. Only I'm going to write the answer. Let's do number one. Number one. Number one. The total of sales journal has been posted to the debtors control account and sales account as 300,000. So how do you correct it? Both debtors control account and the sales account balance is wrong. So we have to correct it. Both the accounts we have to correct it. So how do you correct it? Can someone tell me? We need to increase this sales by another 2,700. Discount we need to increase by 2,700. And sales account also we have to increase. Sales is a credit account. So we increase the sales by 2,700. And narration is correction of sales. Number two. The discount allowed to debtors has been debited to debtors control account. However, it has been correctly recorded in the discount allowed account. So discount allowed account is correct. Now what you have to do? This is not a debit entry. This should be credited to control account. Can you all tell me what is the entry for this? How much you have to credit? 2007 and how much? We have to credit 500,000 because if you credit only 250, that will set off this debit 250. So to have the correct 250 in the credit, you have to credit 2 times, right? So we have to credit discount allow 500, then only this error will be corrected. Discount allowed. And since the discount allowed account is correct, the difference goes to suspense account. Suspense account debit 500. Debtors control account credit 500. Sales these two. Okay. Sales recorded as 300. Added 2,700. Oh, okay. Move to third one. Third one is this purchases. The total of purchase journal has been posted to the creditors control account and the purchase account as 4,200. Actually, the purchases amount is 2,400, not 4,200. So we have to deduct. Right? So 1,800, there is an excess in this purchases. So we have to debit 1,800 as purchases. So that is how we correct this. 4,200 is the wrong entry and correct entry is 2,400. So we have to debit 1,800 to the purchases creditors control account. And since purchases also wrong, the opposite, the other entry goes to the purchases account as 1,800. So we correct this. Finally, the return outwards 20. Goods returned to 20,000 to Priyanka has not been recorded in her account in the creditors ledger. So if it is not recorded in her account, that is an error in the ledger, sub ledger. So we can't do anything for that. This has been debited to creditors control account and credited to sales account in the general ledger. So this is not sales, no. This is not sales, right? This is return outwards. Therefore, we have to debit the sales account and credit the return outwards account. Right? It doesn't affect the creditors control account. Okay. So that is how we correct these 4 errors, correction of errors. I did this question in a different method. Okay, since they have given only the data control account and data control. You can use the previous method which I was explaining. If you want, you can use the previous method. Just drawing the 2 ledger accounts, doing wrong entry and correcting. Let me show. Right, if this is confusing, you can use the previous method as well. That is also accepted. You will get marks only for this general journal. Okay, so if I show the previous method, you can draw, let's say, first one, total sales journal has been posted to debtors control account and the sales account as 300. So you can write sales and debtors. $300. That is this 300. Yeah. So how do you correct this? You have to credit 2,700, debit 2,700. You can use this method. So double entry, debtors control account 2,700, sales 2,700. Is it clear? Same way you can do the rest. Is that clear? So I was telling sales account and debtors account. The error is both credited 300. Debtors account debit 300, sales account credit 300. So to correct this, we have to credit and debit 2,700 to debtors and sales. So that is what the double entry. So same way you can do the rest. No need a suspense account, they don't ask it. So I didn't prepare a suspense account. Then let's move on to the next part. Statement of adjusted profit. Now profit before adjustment is how much? Before the adjustment, the profit was given here. The draft income statement of the company reported 2 million. Loss of 2 million. So we will write minus 2,000, 2 million. Okay. Now, adjusted profit statement is very easy, simple. Once you are done with the general journal, okay, when preparing the adjusted profit, you have to follow some simple methods. Okay, tell me, what are the accounts that will affect the profits? Which accounts will affect the profits? Yes, income account and expense accounts. Only income accounts and expense account will affect the profits. So to profit to increase, right? The profit increase. Okay. For an increase of a profit, income should be debit or credit? Profit to increase. Income should be debit or credit? Yes, it's credit. So if the income is credit, profit will increase. Then if the income is debit, profit will decrease. How about expense? For an increase of a profit, expense should be debit or credit? Yes, so it's debit. Credit. Credit. Is income should credit. If the expense is credit, that means expense is reducing. If the expense is reducing, profit will increase. Okay, so you need to understand this scenario. Okay, so simply from this, we can come to a conclusion. Income or expenses credit means profit will increase. Then it is plus. I'll repeat again. In the general journal, you identify income expense accounts. If the income or expense credit, then you add, profit will increase. And if the income or expense debit side, then you deduct, because profit will decrease. So that is the summary. So first we will identify what are the income and expense accounts here. Data is not an income, data is a asset account. Sales is a income. Here nothing. Purchases, sales, and return. These are the accounts which will affect the profits. Whatever I have highlighted in the yellow, these accounts will affect the profits. Then credit items are plus, debit items, there is only one debit, that is minus. Okay, sales, now let me, sales 27. Always you can follow this. Return. Okay, complete. no, there is a doubt. Now here what I have done is, if the expense account credit, right, profit is increasing. So that is how I have explained here. When the expense credit means expense reducing, then profit increase. Yeah, I compare the income expenses debit credit with the profit. Okay. Let me put it as this way. It's confusing. This is what I have done. Now is it clear? Profit increases when the income credit, expense credit. Profit will decrease when the income or expense debit. Is it clear now? Okay. Now the next part is return outwards. That is also a credit entry, therefore plus. There is only one debit entry, and is sales, which is 20. Now we can get the adjusted profit. $2,000. $2,000. Okay. Any questions? Right. So we'll conclude for today. During the week, before the next class, I will try to have another extra session to do the recent past papers. Right. I really wanted to do 2021 and 2020 papers. Right. So then you will have a picture how the questions that you can expect for your exam. So during the week, I will have a separate session and explain that. Okay. So next, in the next class, we can move to a new chapter, right? And in between, try to watch all the videos which I have uploaded in the Google Classroom and ask me questions. You can WhatsApp me the questions that you all have, and I can explain those answers. Okay. Meantime, when we complete a chapter, try to do all the questions which I have given in the tube, right? Try to do all the questions and ask questions and clear that chapter and move to the next chapter. Then it will be easy for you, right? Okay. Any questions? Any doubts? All right. So I'll see you in the next class. Take care. God bless you.